Hi, everybody. Thank you so much for joining today. Our wonderful moderator is connected
Recording
online.
in progress.
So please go ahead. You can open up the session, Oluseye.
Okay, thank you. Distinguished guests, panelists, colleagues, and friends, welcome to this session of the World Bank Group Civil Society Policy Forum. My name is Olutimayin Olutimayin. I'm the founder of the Absolute Women Empowerment Initiative, and it is both a privilege and a responsibility to moderate our session with the team Powering Africa's Job Agenda, unlocking the growth dividends of women-owned MSMEs through digital capabilities, artificial intelligence, and inclusive digital public infrastructure. We meet at a defining inflection point. The African continent is simultaneously experiencing its first ever expansion of digital infrastructure and its most acute gender economic crisis. More mobile money transactions are processed in sub-Saharan Africa than anywhere else in the world. More women-owned businesses exist on this continent than anywhere else in the world. And yet, those two facts have not yet produced the transformation they should. The question before us today is why? Let me begin with the numbers, because the numbers demand to be heard in a room like this one. Across sub-Saharan Africa, women-owned MSMEs account for an estimated 58% of the continent's informal labor force, and a significant share of household food security, community resilience, and local economic outputs. In Nigeria alone, women-led MSMEs number over 40 million. In Ghana, Cote d'Ivoire, and Senegal, women constitute the majority of informal traders and processors who anchor local supply chains. Across the continent, women-owned businesses generate livelihoods not only for themselves, but for the families, workers, and communities that depend on them. And yet, despite this economic centrality, the structural barriers these women face continue to persist. The 42 billion gender financing gap, which is the difference between the credit women-owned MSMEs need and what they can access, is not the result of market failure alone. It is the consequence of financial systems built around collateral that women are legally and socially less likely to own. It is the consequence of digital platforms designed for users whose connectivity, literacy, and device access look nothing like the average woman trader in Kano, in Abidjan, or Kinshasa. It is the consequence of regulatory frameworks that were not written with her in mind. The World Bank's own data confirms that women in sub-Saharan Africa are 36% less likely to own a mobile internet-connected device than men. The GSMA estimates that the mobile gender gap costs developing economies about $1 trillion in lost economic value in the past decade. In Nigeria, where financial inclusion has made remarkable strides, a stubborn gender gap persists, and women still remain 12% less likely to own a formal financial account than men. And those who do own those accounts use them significantly less productively. Account ownership, as we know, is not the same as economic participation. Access is not the same as agency. Across the continent, artificial intelligence is arriving at scale, it's arriving at speed, and with profound implications for women-owned enterprises. AI-powered credit scoring, digital market platforms, and automated business management tools could, in principle, unlock opportunity at a scale no human program could match. But the evidence is already emerging that AI trained on biased data replicates biased outcomes. A credit scoring algorithm that does not recognize informal income streams would deny credit to exactly the women who need it the most. A market platform designed for smartphone users with high data connections will be inaccessible to the market trader in a peri-urban community with a basic handset and intermittent connectivity. The promise of artificial intelligence for African women entrepreneurs is real. The risk is equally real. The question before this panel is not whether technology can help. It already does. Nigeria's SANEF agent banking network reaches communities that formal banks have never entered. Interoperable payment rails from Moja Loop to M-Copper to MTN Momo are moving money that women traders previously could only carry in cash. Digital identity systems from MOSIP to NIMSI's biometric register are beginning to make women in the informal economy legible to formal institutions for the first time. But these systems remain fragmented, undergoverned, and unequally distributed. The concept of digital public infrastructure offers something different, a framework for building the foundational digital rails of a modern economy with identity, payment, and data exchange as shared, open, interoperable, and sovereign systems that serve not just the formally employed and the digitally literate, but every citizen, every entrepreneur, every woman trader who is willing to participate in the digital economy, if the digital economy is willing to include her. The World Bank's 50-in-5 campaign is targeting safe and inclusive DPI deployment in 50 countries by 2028. Mission 300 is aiming to connect 300 million Africans to electricity, and in so doing to the digital economy by 2030. These are ambitious commitments. This session is about turning them into accountable ones, because a DPI system that reaches only the urban, formally employed, and digitally literate, it is not a public infrastructure. It is a premium service with a public subsidy. The session's 5 thematic pillars are digital literacy and business capability, technology inclusion through AI and DPI, formalization pathways with measurable benefits, responsible finance models that reduce collateral dependence, and market access through e-commerce and platform integration. And they are not a wish list. They are an integrated architecture. Remove one pillar and the structure collapses. A woman who gains digital literacy but has no payment account to use it with gains little. A woman who gains a payment account but remains unregistered as a business owner cannot access the credit that the account could unlock. A woman who has credit but no access to market generates no revenue to repay it. These interventions work only in combination, and they require governments, investors, civil society, and the private sectors to coordinate in ways they rarely have. To address the full depth and breadth of this challenge, we have assembled 4 extraordinary practitioners, each of whom brings a distinct vantage point and a distinct set of answers. Together, they represent the policy architecture, the financial infrastructure, the investment ecosystem, and the governance accountability frameworks without which these transformations cannot happen. As our panelists share their perspectives, I invite this room to hold 3 questions in mind. 1, who does digital infrastructure actually serve when it is designed without explicit inclusion mandates? And who does it leave behind? What is the minimum viable commitment from governments, from multilateral institutions, from the private sector that transforms inclusion from a value statement into an enforceable standard with consequences for non-delivery? How do we ensure that Africa's AI moment does not replicate the financial system's historical exclusions at algorithm speed? And who is responsible for preventing that outcome? These are the questions that 56 million women-owned enterprises across sub-Saharan Africa with no access to the credits, the digital tools, or the market connections that will allow them scale are implicitly asking every time a government signs a digital transformation commitment and every time a development financial institution approves a digital infrastructure loan. This session exists because the status quo is not working. It exists because the tools to change it, like DPI, AI, agent networks, patient capital, and governance frameworks, are all within reach. And it exists because the women who would benefit from that change are not sitting in this room. They are running the market, feeding the families, and building the economies that these institutions was designed to support. We will not power Africa's job agenda by describing what good infrastructure looks like. We will power it by building the infrastructure, governing it for equity, financing it with courage, and holding ourselves accountable to the women it was designed to serve. Without further delay, it is my honor to welcome our panelists. We will begin with Rita Olai, the Digital Development Specialist at the World Bank, who will set the policy and infrastructure foundation for everything that follows. Please note that because we have a largely virtual panel, we have adopted a presentation style for this panel where each panelist will present their perspectives on the subject matter, and we will then have a Q&A session for the audience at the end of the presentation. Thank you, everyone. Ms. Rita Olai, you have the floor, please. Thank you.
Thank you so much. Good morning, everyone. It's my pleasure to be here. So I'm Rita, a digital specialist for the World Bank. And today, actually, I feel like Oluseye said everything because the introductory words were very, deep in terms of, reflection and data. But I will try my best today to talk about jobs, to talk about growth, and to talk about a gap that we can no longer ignore. So we all know the women digital gap, but also women access to finance. So today what I will try to do is actually to connect the data, what is happening on the ground, and what lies ahead. So if you allow me, I will start with three key numbers to set the stage. So first of all, we have a 29% gender gap in terms of mobile internet adoption in sub-Saharan Africa. And when it comes to digital payment, today we have 11%. So it's less, but it's still something. And the figures are even greater when we look at the financing gap for women MSMEs across the continent, which the African Development Bank estimates to 49 billion. So now that we have set the stage, let's look into, the details, because there are some, if I can say, paradox. The fact is, today we can say that 70% of women own a phone, but only 39% actually use mobile internet. So this is because of different reasons, starting by the cost, affordability, starting also by the skills to use it, the confidence, the trust, but also simple social norms, which can also affect the way women use internet. And Oluseye also said it rightly at the beginning, because Africa is actually where we have more women entrepreneurs than men. And we all know that. We know the drive that African women can have. So what's the issue? Why their businesses are actually 34% less profitable than the ones of men? So this is what we are trying to address here. And I will go further. I will actually challenge the fact that some people say that this is only like a woman's right issue. It's actually larger than that, because some estimations say here that 1.3 trillion gain in terms of GDP could be added in emerging markets if we close this gender digital gap in mobile internet only. And there is a 230 billion opportunities sitting on the table that mobile operators are not taking advantage of, because unfortunately, as of yet, mobile telecommunication companies are not really addressing the expectations, the need of women when it comes to digital services. So what does it mean? It means, lost opportunities in terms of jobs, because of course women who cannot, access the system cannot fully take advantage of those jobs opportunities. It means also lost access to credit, because of course if you have no ID, you have no digital transaction history, you are losing a lot in terms of credit access. And it means lost market, especially e-commerce. So there was that study done by IFC and Google that actually mentioned that $14.5 billion could be gained in e-commerce by 2030 if women were actually taking more participation in e-commerce across the continent. So I think that's something important. And finally, because all women are not fully participating in the civil life, they are not accessing digital public services, it's also a portion of the population that we do not hear. Those are area lost voices. And I think this is a waste, like a loss for all nations who are actually still, tolerating this gap, not doing the right, things to address it, because it's not only, as I said at the beginning, a women's rights issue, but it's larger. It's actually a macroeconomic loss for every nation. So, but before we address the solution, I want to take a step back and talk about the digital inclusion, concept. So what does it mean? Three things. I was tempted to say the ABC framework, but it's actually read ACB, so we will go with it. So the first one is access. So making sure that women have access to connectivity, but also to device, because it all starts there, both in urban and rural setting. And the second one, capability. Capability in terms of digital skills, literacy, financial literacy as well, but the trust and the confidence to use those tools effectively. And the third one, benefits. Benefit in terms of, social outcome, economic outcome. When we're talking here about, access to jobs, to credit, and again, the question of job is actually decent job, not just, any kind of job. And of course, this is the result is not a byproduct. It's a result of choices, and then based on those choices, because it's important to make the right policy and design choices, the World Bank has put digital access for women at the heart of the World Bank Group 2030 gender strategy. So what we are committed to here is 300 million women using mobile broadband by 2030, and 250 million more women having access to social protection services, and 80 million more women accessing capital. So this is the global, the high level, commitment that we made, and we are putting things in motion. Our president himself of the World Bank said that we cannot end poverty on a livable planet with half the planet excluded from reaching their full potential. So I think this speaks a lot, and this is important to keep in mind as we address these points. So to achieve that goal, to achieve that mission, so at the World Bank, we have, like 3 mutually reinforcing pillars. And the first one is actually making sure that we get the rules and the access rights at the beginning. So in terms of rules, I'm referring to the regulatory framework when it comes to telecom, to data, to financial services, to ID, but also the access to, reliable and affordable devices, but very importantly is also to have a good AI accountability standard set up in those communities that we're trying to serve. And the second pillar is the one about building the rails for everyone. And by rails here, we're talking about the DPI, so the DPI which are ID, also payments, but very importantly, safe share of data across different actors. And here we think that this is important to build digital services on those digital rail, and having some gender responsive and robust onboarding, because this makes a lot of difference. And the third pillar is actually also putting in place the skills to use those rails, because you cannot be only addressing the supply side without addressing the demand side. So this means, delivering very targeted financial and digital literacy programs, but also pushing it to more advanced digital skills, because of course we talk about literacy, but there are also women who are doing amazing things in the tech sector. So we need also to make sure that we accompany them. We also provide them incubators if they are startups, and these are very important. And the question of online safety and digital confidence is coming more and more. So we need to address all of this in the the skills program that we are putting in place. So in practice, we have about 30 projects at the World Bank globally who are really focusing on addressing the digital divide. But today, I will talk about just a few. Starting with Rwanda. Rwanda in particular is an example that I like a lot, because we've seen clear progression over the last years. And in Rwanda, the World Bank has worked with the government to set up a dedicated fund to increase smartphone access for women, but also for people with disability. And we've seen, this being put in place. We've seen, success coming from there. And this was also coupled with a lot of intervention at the digital economy level. For example, connectivity access, so Wi-Fi hotspots in areas which are women-friendly. So this is very important. And we have also developed a lot of digital skills program and financial literacy programs to accompany all of this, work. So that's the Rwanda example. And I don't know if some people in the room or online actually have followed yesterday the World Bank Group Gender High-Level Panel. And we had the governor Surayyah of the development, the Central Bank of Rwanda, who was on the panel, and she talked about how they really were able to reduce that gap in terms of digital financial inclusion, or even financial inclusion in general for women. So it means that they did a lot of on the ground action. Some people were even in real setting, like actually why the central bank is coming to do all this, but this is important and this is what it takes. And I think this is an example to really consider. And as a matter of fact, I understand that she was actually the first woman as a governor of the central bank. So this speaks, loud enough. So that's very interesting about Rwanda. In Togo also, the World Bank worked with the government to reach 1 million people. That was during the COVID situation. and 65% of them were women. But this was, a very interesting example because it used a lot of, satellite data to target the beneficiaries. Of course, AI models also based on the mobile code record to make it, efficient. And then today it became a full-fledged social protection program of 100 million. And so far it's going well and really, having impact where it matters. In Madagascar as well, the government put with the World Bank again a women SMEs credit guarantee fund. So that was interesting in the fact that a lot of women were able to access formal financing for the first time. And this makes a huge difference. But I want to take a moment on the example of Benin. Benin is actually a kind of, governance first success story. And why I say that is the fact that Benin went from, I would say, 58% of women who had no national ID. And today, the country has 98% of the population covered with some kind of functional ID, which give them access to services that before they couldn't get. And of course, every newborn girl is registered at birth. And we've seen tremendous increase in terms of the number of mobile money accounts in the country. So again, payments. And then the policy. Actually, Benin is one of the few countries in Africa who have set a clear digital gender policy. And I think this is important because it set up clear and accountable targets to see how this is evolving, and this is something to follow, to be, to inspire other African nations. And Benin, again, is in partnership with the Smart Africa Alliance, and they are piloting some kind of, solution to make e-commerce in terms of accessing to verification of ID credential, access to finance and trade across the region a reality. It's still a pilot stage, but it's very promising and it's worth, following. And I will also share some evidence that we have to, from research. So in addition to those operations, we also do a lot of research in this field. A lot of data, but let's focus a bit on a few more. So we've seen that digital payment instead of cash, but also having, having digital tools and online marketing for women business make a difference in terms of profitability. So we've seen an increase between 15 to 25% for those aspects. We've also seen that remote work and digital platforms can open up doors when social norms restrict women mobility. So we know the family obligation or the care obligation that women can have. So having this flexibility is really important. And the last figure I would like to spend a bit of time on is this last one about the business survival rates. So we've seen clear evidence that when women receive digital and financial literacy programs, there is a clear, chance that an increased chance that they will stay in business longer of 12 to 15%. And I think that's very important. That's something that should inspire more, policy making, but also the way programs are being done on the ground. So I will talk about, what lies ahead. As I was saying at the beginning of my, presentation. So AI, of course, it's coming. It's already here. We see the opportunities. It's reshaping a lot of things, but there are also some, risk. And in terms of opportunity, what I would say, of course, is that AI credit scoring, for example, it's allowing, women who would not have access to traditional financing with all the collateral requirements. Today, they are able to get this access. It actually make them save time because some, tasks can be automated. And especially for women who cannot read, voice-based tools, AI tools, in local languages can make a huge difference. And this is very important. But at the same time, of course, this is opening doors, but there are some risks. The risk of exclusion, the fact that we don't want this existing gap also to translate into the AI world. So I think it's important to look at, bias, not to, really transpose those bias into the way the AI models are built. So that's important. And some of the work that women do may face, higher risk in terms of automation education, so meaning like, lost jobs, but it's important to give them the skills so that they can actually use those AI tools to their advantage. And the last 2 points about data privacy and safety participation are equally important because of the fact that women should know how their data are used, own the data, and have, if you want, informed consent. So this is important. They should really know what's being done with their data and what they give access to. So for really keeping women in the AI economy, I would really make it simple. It's really about building the first one, fixing the foundation first. So ensuring access to, devices, to connectivity, but also to ID. And very important also is to regulate before harm occurs. Do not wait after the fact to actually have those regulations in place. But we don't also want to have regulation who are, against innovation. So we need to find this right balance. And of course, design with women in the room. In terms of, engineers, policymakers, users, all of this is important so that they know, they know what they expect, they can have their voice heard, and also they can actually be in a position to suggest, I would say, small AI solutions, which makes sense. Small AI solution in the sense of solution which doesn't require, a lot of high-level connectivity needs, but actually addressing, quickly the need of people in terms of health, education, and this is important to have on the table. And the fourth aspect, again, the data right and sovereignty. So women must own the data. I mentioned it already. Invest in digital capabilities. And of course, this takes a village. It means we should coordinate across sectors. We should coordinate across actors. And I think in this room, we have representatives of government, of development partners, and private sector. It's important to clarify the roles. So to be very short and summarize what I think can really make a difference for the government is to have gender by design principles in the way the digital access policy are designed. So this is a very important. Have like a long-term vision in terms of defining those targets, enact smart AI accountability laws, again, that encourage innovation, and set those targets which are measurable. And then all stakeholders will commit to actually measure. And actually mandate annual published gender disaggregated data. So this is important because we cannot actually address what we do not measure. And for development partners, I think it's also important for us to put actually those development outcomes as a condition also for the investment that we do, of course, collectively with the beneficiaries, and fund those gender disaggregated data collection exercise, and of course, doing the impact evaluation through research and all we do to really see what makes a difference. And we've also seen in some countries that the dedicated catalytic fund for women, especially tech entrepreneurs, makes a lot of difference. And finally, for the private sector, it's really about, very intentional about adopting gender design standard for DPI and AI tools, and also developing go-to-market strategies that really put women needs at the center. And something also very interesting that we've seen is to conduct those audit AI bias to see what are the bias for in terms of gender adoption and how this can be correct before the solutions are scaled up. So I think this is also important and should be taken into account. And of course, partnering across these different sectors will make the huge difference. And I will conclude here to say that actually no ID, no access, no growth. It's really the story of a lot of women across the continent. But what we've seen is that it's not a technology constraint. We've seen a lot of countries, building those technology, it worked. I gave some example, but using the same technology in other geographies, it doesn't work. And what we can say is that the governance, make the difference. And this is important to make the right choice in terms of policy, in terms of design. So around the room here, and also people joining us from, online, we have the ability to make those choices, and I will encourage us to really make different choices as of now, so that we can see the story change in the right direction. Thank you.
Thank you very much thank you very much, Rita, for a very detailed presentation. We've seen the progress the World Bank is making, and it is interesting to see that World Bank is taking an ecosystem approach to building these gaps. I'll just ask a question, which you might have to answer before we move to the next panelist. The World Bank digital development work spans some of the most complex markets in West and Central Africa. What does your experience deploying DPI in these markets tell about the specific governance and design conditions that determine whether DPI serves women-owned MSMEs? And what must African governments and their development partners do differently if AI is to be a force for inclusion rather than a new instrument of exclusion?
Thank you so much for that question, which is very at the heart of what we've learned and discussed so far. But I think from the experience that we gathered, it's really important, first of all, to make sure that we have those, ID solution, because you cannot address the, the needs of the people you do not know. And make sure that also they have the way to access those digital services. So I talk about the, digitally included. I talk about that, the ACB framework in terms of access, in terms of capability and benefits. So this is very important. And another aspect is actually to include them, but very actively in the design, in the way things are done. For example, we've seen that in terms of enrollments for some solutions, we expect that, women, for example, will come to those registration centers, but we actually have to find a way to go to them, to go to the market, to adjust, to agricultural, agri, programs that they may have, find a day that work. I think those are very important. And also when it comes to, putting together digital training programs or financial literacy programs, we also need to make sure that we have the setting which is right. For example, we've seen evidence where you offer, let's say, childcare support or even flexible hours for women. We can say that it's really nothing, but that's really important. And it's actually allow a lot of women to access those aspects. And the last point I would say is really to be at the forefront and anticipate the fact that we don't again want to transpose those biases existing today in the AI world. And we want to build DPI which are inclusive. DPIs that take into account the fact that a lot of our economies are informal, cash-based. We've seen in countries where mobile money, for example, has transformed the economy. It's amazing what we can do today with mobile money. And in terms of security, in terms of gain, in terms of long-term credit history building, this is really changing the story here. So I think based on those aspects, it's really a learning process. It should be more intentional. And I think as we go, we are getting into the right direction, but a lot of effort is still needed. So that's what I would say. Thank you.
Thank you very much, Rita, for a very detailed answer. Thank you very, very much. Our next panelist will be joining virtually. Her name is Uche Uzoebo. She's the Managing Director and CEO of SANEF Limited from Nigeria. As the head of Nigeria's foremost agent banking and financial inclusion infrastructure organization, she will address what it actually takes to bring financial services to a woman trader in a community where there is no bank branch, often no reliable electricity, and where trust in digital system must be built person to person and agent to customer. Welcome, Uche. Please, you can make your presentation. Thank you.
Good evening from this side. Good morning, good afternoon from wherever you are in the world. Thank you very much, Uche, and I'm very excited to be here, to be part of this this very important discussion. So I'll be bringing the perspective from Nigeria and what we have done, in the agent banking space, particularly how we're empowering the women. Digital public infrastructure has become central to advancing financial inclusion globally. So what infrastructure must be both digital and accessible. And in Nigeria, what we did was we used agent banking to bridge this gap, serving as the last mile layer that connects national systems to everyday users. So I'm going to be talking about how the work that we have done, what SANEF is all about, and how we have used the initiative to be able to access and create employment, not just for the women, for even the youth and everyone that requires to have access to job, and also ensuring that the last mile is included. Agent banking has become a critical pillar in advancing financial inclusion. So what we say, and what I also say, that agent banking is the new banking, it's not just the channel, but it has become a way, one of, to empower individuals, also create source of additional income to those that have existing businesses and also livelihood, and to reduce the poverty rate and unemployment in Nigeria. Of course, so we use that to deepen access to formal financial services in Nigeria. From the early stage when the regulators, the initiative was put together by the regulators, it evolved into a vibrant economic driven by a diverse range of stakeholders, which includes the banks, the deposit money banks, the microfinance banks, fintechs, the licensed financial service providers, starting from the mobile money operators and the super agents who deliver this remarkable growth transformation. Of course, in talking about the agent banking, a subsequent part of it, which involves the female agents, this has also proven a very vital, connector in the initiative. So, of course, trust is important. Rita spoke about it. Accessibility is important, and we also need to influence the communities. And of course, we've seen that the female agents will be able to do this aside the male agents. Yet, of course, we still face the barriers in this in our country, and we decided to also address these challenges by going deep into the communities and of course doing this with the collaboration with a lot of partners in ensuring that we get it right. Next slide, please. So I'll briefly talk about SANEF. SANEF means Shared Agent Network Expansion Facilities. It was incorporated in 2019 to promote financial inclusion and financial access points through agent banking. It's an initiative of the Central Bank of Nigeria with the deposit money banks, as well as the licensed mobile money operators and the super agent. Initial mandate was actually to acquire 500 agents across the 774 local government areas in Nigeria to be able to ensure that we have at least one agent in the local government. And having one agent is almost like having a bank, so that we'll be able to include the excluded. But that target was surpassed by 61,000 agents at the end of 2020. And today we can talk about over 2.5 million agents across the 6 geopolitical zones in Nigeria and the 774 local government areas. And since we met the mandates, we have continued to engage with stakeholders, becoming the enabler of financial inclusion in Nigeria. So in the last 7 years, the numbers have increased. We have spread across the geopolitical zones, with women contributing at least about 25% of this over 2.5 million agents. There's also a technology platform to enable account opening and wallets across the financial services. We also have stakeholder collaboration. Then financial literacy is also very important, to boost the awareness of the consumers, as well as some engagements that we have in the community level, involving the regulators, involving the state government, involving development organizations. Those are who are also driving this course. And also being the repository of the agent banking industry reports and data, because you cannot even move forward if we don't have that centralized data, because data actually defines the next step that we're going to take and also gives us the clarity where to focus and also the work that we have done, so that investors who want to invest globally, or even there are also other additions that they will learn from what we have done through this data reporting. We provide that, and that's is also what we drive, so that the industry will be able to know the impact of the work that has been done. Next slide, please. So from access to inclusion and from inclusion to empowerment, so I'm going to speak about what has happened, like in the past, the present, and also the future. Like I said earlier on, in the past, Nigeria is a bank-led country, and in the past, of course, the traditional banks were there, and the banks couldn't do it alone, and that's why they came together with the licensed mobile money operators to be able to have more banks in the form of agent banking to be able to get to the community. Of course, there was a lot of reliance on cash denominated country. The physical branches were not even sustainable. So somebody like me, so where I come from, people will have to travel at least 2 hours to be able to get to a proper bank branch. And also, that's cost effective. The MSMEs, the consumers, everyone is losing out on the businesses. So that is why the birth of agent banking and also SANEF driving this initiative came to force, or the present, that agent banking is there. And I would say there's still a lot to be done, but we have done very well in that, because when you come to Nigeria, what they call it, the POS agents, that's the layman, the POS agent, that widely spread everywhere, and people are able to have access to funds. They're able to do transfers, they're able to make bill payment, they're able to even open the most basic accounts. But most importantly, they're able to make income for themselves. They're able to fund for themselves. The women in particular are able to do something for themselves, and they earn for every transaction that is being carried out, they earn income. And that wouldn't also distract them from being the woman they are, distract them from their usual businesses, distracting them from being the mother or taking care of the home, because this is our businesses that they could also do at the comfort of their homes. And in doing so, they also bring in other women and attract other women to also become agents. So, of course, in the future, we're looking at where we have smarter agent network driven by data. I spoke about data and technology and interoperability. Stronger focus on consumer protection, which is very key, and reliance and inclusive growth. So today, towards the last quarter of last year, we had a revised agent banking policy from the regulator, and this is actually to also enhance the work that we're doing to ensure compliance, and as well as having more accessibility, more people access, the agents, and also accountability, very important. Next slide, please. So the SANEF agent network, the physical and digital gateway. So I'm going to talk about this. Next slide. So the last mile, because I tagged the last mile on ramp, agent banking as critical digital public infrastructure. So one of the things that drives this is that the human trust is very important. Without that trust, the consumers will not be able to, even accept that, because that's why from their community, we go to the community to have engagement. They are the first port of call, and those people in the community are actually the ones that are the agents. So a woman meets a familiar face in their community who said, oh, okay, you're the one, and they were able to trust them and entrust of the transaction, what they are going to do, with them. So that's very important. Then the distributional power. SANEF agent network also acts as a powerful distribution channel. Before SANEF started, we had only over 50,000 agents. That was in 2018. And also we had that target to be able to have enough distribution channel across. And that was also, achieved, and we're still having more agents. And like I said earlier on, over 2.5 million agents exist today in Nigeria. And this has also created a lot of jobs, even in the semi-urban zones where bank branches are scarce and as well as non-existent. Banks have stopped building the traditional banking. Instead of having to use that investment of over $500,000 building a bank branch for just the basic services, those funds are being channeled to also empowering more of this, collaborating with the licensed financial service providers, and also empowering the agents to be able to do more. They also use them as financial literacy ambassadors. So instead of duplicating that, because at the end of the day, the bank branches are just existing for the mere basic $500 POS transaction that would have been done. Of course, as a country, it has also improved our economic inclusion. A lot of jobs have been created, and I can speak towards during the COVID-19 pandemic. A lot of banks, all the banks were closed. People couldn't go to the banks and all, but guess what? The agents were there attending, because payment and collection was something that we also globally that was going on. People needed to have airtime on their phones. People needed to be updated with what is going on. People needed to buy food. People needed to make phone calls. People were attending meetings virtually, and they were getting all the bill payments and, charging, getting, cash from the agents. So during that pandemic, we saw the agent banking also boost heavily. In fact, I think we had the highest onboarding during that period. A lot of businesses too were not there. We were not having weddings. We were not going out. So what happened was that a lot of the MSMEs now also adopted agent banking as additional form of business rather than just sitting, because people were not having weddings. People were not making clothes. So they adopted this line of business to also add to what they had. So that percentage, that year we had at least over almost 300% increase in agent onboarding. Next slide, please. So why payment rails and digital systems need this human infrastructure? Without agents, systems remain elite or urban focus. You still need the human intervention. The agents, they provide that the hybrid bridge. They assist them because let's not forget that yes, we're also talking about digital, but you also need a human face to that. So to ensure that interoperability reaches everyone, the SANEF agent network has a huge massive transaction growth and inclusion goal, and also global lessons have shown that agent network are essential for DPI success. During Mary's presentation, we saw all that, some of the examples she gave and also the numbers, and so we can't overflog that. And the model of SANEF proves agent banking is not an auxiliary thing, it is a core DPI infrastructure. And we've also had some other countries even come, for exchange learnings to also see how they can replicate this initiative in their own, country. So the bottom line is that technology alone doesn't include people. Trusted humans as the last mile do, because that trust is very essential. Next slide, please. So we have, what are the barriers to women's digital financial inclusion? We cannot speak about this without talking about the barriers. Of course, we have huge barriers, which we have also seen, because I'm speaking from a informed place, because we've gone out there, we've gone across 36 states in Nigeria, also trying to understand and to see for ourselves what the barriers are, what the problems are, particularly in the North. And first and foremost is the digital and financial literacy gap. That is a huge one. Women often have no exposure to the digital tools, lack of confidence in navigating the apps. The cultural norms are there. Like I mentioned earlier, in the northern part of Nigeria, women's mobility is restricted. The men control the household, the finance, so they're not able to own their account on their own without the permission of their husbands, to open accounts. And also, we also have the default male architecture. That most professional products are designed, for the male, for the men, while the women's economic life are often characterized by high frequency, low value transaction. But the flip side is that from the percentage of transactions that we also see from the agent network, we have the female agents to be more stable. They actually do more transactions. They have high turnover of transactions. And even when we have our agent forums, they are the ones that top, top the chart when we have to reward agents. And some of the interventions, what SANEF has done, to bridge this barrier and also moving the needle, and leveraging this female agent network. Recently, we had a partnership with Women's World Banking, to increase the female agents in the North. And we started a pilot early this year, the Q1, and we've also seen where the females are also adopting that as another source of income, especially in the rural areas. It's also a safe space, because when you place a female agent and for the female agent to also adopt other consumers who are female, they feel very safe, in their them transacting with them. So even when it comes to loans and all that, we've seen that the female, of course, they also repay their loans, and they kind of have like a go-to that preferred to be able to to give loans to. Also, we also had a strategic partnership with Enterprise Development Center, where we had to train over 5,000 female, financial literacy and as well as agent banking, so that they will adopt that as additional form of business aside their own current businesses now. Next slide, please. AI is the visibility engine for inclusion. So we've had that. So voice AI interface. This allows women with low literacy to interact with banking apps. So we've also started looking at how we can use this, in different dialects in Nigeria, at least the 3 most prominent dialects. You have the Yoruba, you have the Hausa, and the Igbo, how we can use that, as well as for fraud detection. Women are often targeted for social engineering scams. So AI identify the anomaly in the patterns to freeze suspicious transactions, the micro lending board. Then we also have the NDPA compliance, the CBM framework, automation of the anti-money laundering system that prioritize protection for customers' funds over mere institutional reporting. Then the algorithmic fairness that prevents the penalty panel, where AI might charge higher interest rates to low-income women. Next slide, please. And probably a silent prerequisite. So, today I can say that we can boast of this because this is also already existing. We have that, shared liquidity pools and seamless integration across providers, IDs, and services, the key benefits for gender inclusion, because we'll talk about the convenience and low cost. Women can transact with their families and merchants or government programs without multiple accounts, or travel, better liquidity and agent viability, as well as increased usage and control. So real time, open system where they interpreted the mobile money switches have brought millions of women into the financial space. They've also given a lot of them loans as well, and they're also repaying, and it enables direct receipts as well, and also having to have other business payments done through agent banking as well. Next slide. Financial literacy as a structured investment. So one of the things that I also say in the SANEF that we have invested in is the financial literacy, because access is the invitation to formal economy. Without this literacy, they will not even be able to understand what is happening. And sometime in 2021, we partnered with CBN to create a platform that we call the Sabi Money. So it's an e-literacy platform where the agents also learn. They have a certification training that they do, because when they finish that, they become ambassadors. Because financial literacy impacts inclusion in several ways. So that's why we brought that platform together with CBN, so that they'll be able to go through it, become the ambassadors, because we can't be everywhere, because the agents are also ambassadors of financial literacy in their various communities. And like I said earlier on, trust is one thing that is very important, and they trust the people in their community. So they trust these agents, they look up to them because they are the ones that guide them. So we also have to ensure that they have the right tool. We have to ensure that we protect the consumers from risk, we'll protect them from fraud. So by the time the agents go through the certification and also the training, they understand what the agent banking business is all about. They're able to explain to the consumers, even when they approach them to open bank account, they're able to explain why you need to open a bank account, why you need to save, and why you need to protect your your PIN, why you need to have why you need to have your debit card and your debit card PIN, to yourself. So all those are part of the things that we teach them, as well as the digital financial inclusion, understanding the different structures of the fees and where you have digital risk. Next slide, please. So women as key drivers of financial inclusion. So I'm going to close with this because it's a very important, it has become very, very important, not just for Nigeria, but even globally, because they play a vital role. It's a game changer. Globally, we're seeing that, because empowering women as agents promotes economic inclusion, ensures that the household income is stable. It also develops the community, as well as giving them confidence and also a voice in the community. So women agents, they drive high adoption of savings, as well as other financial service products, welfare-linked products, influencing the household financial decisions. So women in the north in Nigeria, 28% less likely than men to use mobile internet. So why not go to an agent? That's why it's very, very important that today the physical agent, it's still very, very important. Whilst we're moving to the digital era, they'll rather also have the female agent be able to transact with the female agent. And only 47% of women access formal financial services in 2023, compared to 58% of men. That is according to a final report in 2024. So it's very, very important that we have women as key drivers for financial inclusion. Thank you.
Thank you very much, Uche, for a very detailed presentation. It is interesting to know that SANEF has over 2.5 million agents. That's significant job creation. And it is also interesting to know that SANEF is leveraging AI to advance fraud protection and also promote digital trust in the system. Our time is fast spent, so I would just like to move on to the next presenter, Surayyah Ahmad. She's the Taskmaster of the Youth Enterprise Investment Bank in Nigeria. And she would address the failure of the conventional capital markets to reach women-owned MSMEs and the investment model that corrects it, the one that they are building through YEIB. Surayyah, you have the floor. Please note that you have about 10 to 12 minutes. Thank you.
Thank you so much, and I hope my presentation will be short enough. So I'm very quick. Again, my name is Surayyah Ahmad. I currently lead the operationalization of the Nigerian Youth Entrepreneurship Investment Funds. This is a new vehicle, so you might not have heard much about it, and I'm pleased to present the kind of structure and the kind of solutions that YEIB is currently presenting in the market, and what that means for young people and women, and specifically for job creation. So, I mean, I hate to be a broken record, but I think it's been echoed here a lot. The disadvantages that women face, especially when it comes to access to finance. But even access to financial services is significantly different from access to finance for women, because when it comes to access to loans, you know, primarily women face the issue of lack of collateral, right? And when it comes to equity investment, primarily women face multiple issues: lack of network to access that investment, limited mobility, and the fact that a lot of capital allocators are actually men. And by virtue of that, most people allocate capital to, you know, other people that are like them. So we have less than 2% of venture capital funding going to women-led businesses. And of course, there is ripple effect to that. What it means is there will be less women employed in communities, because there is significant data that shows that women employ more women. So the less women we have accessing capital, the less women we have with larger businesses. By extension, the less women we have employed in communities. So there is a ripple effect to the lack of capital or access to capital that women face. However, when you then say women are young women, so when you say women under the age of 35, then the intersection brings to life a completely different reality. As a young person, you're even less likely to have collateral. As a young person, you're less likely to have experience or savings. So when you have an intersection of women and young people, that is a dually disadvantaged demographic. And that is what the Youth Entrepreneurship Investment Funds is designed to do. It's a Pan-African vehicle conceptualized by the African Development Bank, and currently present in Nigeria, Cote d'Ivoire, Ethiopia, and Liberia. Now, the goal is to design a specific financial institution that addresses the gap that women and young people face. And I think this is astronomical in the sense that this is an all-in-one platform that brings together different types of instruments, as well as different solutions that addresses an end-to-end market, structural market issue. And I'll be pleased to put you through some of those structures that, you know, what we call blended capital structures that are designed to solve some of the fundamental issues that a lot of the panelists today have addressed. So yes, that is YEIB for you in Nigeria. In Nigeria, YEIB is co-owned by the Nigerian Sovereign Investment Authority and the Development Bank of Nigeria, but is also led or anchored by the Federal Ministry of Finance as an anchor investor. So I'll be putting you through a couple of the structures that YEIB has and what challenges that structure is addressing. I've spoken a little bit about the lack of collateral, about the high risk that women are considered to have and young people, but also about the fact that young people and women are considered uninvestable assets, right? But outside of financing, there's also the other side, which is we keep talking about AI, which is an incredible thing to talk about. However, we do not really even have the digital infrastructure to lay that AI on. A lot of current SMEs and business owners, especially women and young people, do not have access to data or access to the infrastructure that allows them to even structure their businesses. So e-commerce, for example, cash flow management, things that make these businesses bankable businesses. So what you have is you require both a financial infrastructure to address these issues, but also a non-financial infrastructure that addresses the ecosystem issues. And that is what he is doing concurrently. Next slide, please. Okay, so again, I think I explained a little bit about the structure of YID, but it's practice-led and government-enabled, and is targeting an AUM of 300 million with currently $100 million sovereign liquidity from the African Development Bank to the federal government of Nigeria, which is the anchor investment that is leading this vehicle. But most importantly, it is what are the instruments that we believe are going to make a difference to the demographic that we're talking about? We have blended structures like this. So the YIB has 3 funds, the Equity Investment Fund, which is the majority of the AUM, and the Equity Investment Fund has 2 components. One of them is direct investment into MSMEs, so both female and youth-led MSMEs. And the second one is indirect investment into the same demographic, but through venture capital and private equity funds. Now, let me break that down further. What we currently have in terms of NPR in Nigeria, the current prevailing rate is around 27%. I think it's just been brought down by 250 basis points. Now, it is extremely killing for any business to grow at 30% plus. We know that you would have to have EBITDA margins above that, and it's really difficult for businesses to have this. Now, being able to have a patient capital vehicle, a permanent vehicle that has patient capital that would be able to deploy equity into these businesses is a huge game changer. It means we're giving these businesses a lifeline of over 10 years to be able to grow and scale, and then to be able to return share capital increase. And that is a massive, it's a massive step forward from, coming from that debt environment or killer debt environment that we used to have in the past. So that is what the Equity Investment Fund is mostly focused on. But the other side that makes this really interesting is the fact that the indirect part of the Equity Investment Fund, which is investing in PE and VCs, would also target gender parity. So what you would have a lot of female fund managers who are also deploying capital that would be able to access funding from this indirect fund, and by extension would be able to then pass funding to women-led businesses. So I think what we have here is a clear sort of financial architecture that is created to support both women and young. Now, the second is a credit guarantee fund. I have heard a lot of conversation here on the panel about lack of collateral. And we all know that that disproportionately affects women and young people. So the Credit Guarantee Fund is designed to provide up to 75% guarantee coverage for women and youth-led businesses through commercial banks and microfinance institutions. This is a game changer in the sense that you do not need to have a collateral to walk to a bank to get a loan between $500 to $500,000. You can literally walk in and you're covered by the Credit Guarantee Fund up to 75%. The last component is the Ecosystem Development Fund, and I'll speak a lot more about this. Now, we've also talked about how women in rural areas are disproportionately affected by lack of access to digital infrastructure. There's a very high chance that female-owned businesses in Abuja and Lagos have access to an ERP, have access to an accounting system that allows them to keep records, have access to an e-commerce platform, or even the talent that would be able to build those products for them. However, once you go outside the major cities in Nigeria, what you would find is women in other secondary cities, as we call them, are disproportionately affected by a lack of an ecosystem that can support them. And what this Ecosystem Development Fund is doing is drilling down the support to the rural level, so that enterprise support organizations and business development organizations at the rural level are empowered through grants, capacity building, to be able to support local businesses. And this is what would directly translate to even using AI, in the sense that, if you're a business in the rural community, you have access to a BDS that has capacity to digitally enable you, or an ESO that has capacity to support your business digitally, then you're building the grounds for the use of AI in your business. And I think, again, this is also a game changer. In terms of jobs, YEB is specifically created to support the creation of jobs, especially in the demographic that we talked about. So the goal is to create 1.6 million jobs over the 20 years that the vehicle is going to, that the first vehicle is going to be existing for. Next slide, please. I'm going to skip this because I think I've already talked a little bit about the impact that YEB is going to make. So I'll go to my last slide, and I hope I'm able to keep to my 12 minutes target. So look, we're all saying similar things, but most importantly is we cannot solve this problem unless we create products that have women and the demographic that we want to impact at the core of the design. And first of all, is really creating blended capital vehicles such as this that absorb first loss, that provide guarantees, but that also targets women at the rural level. Otherwise, we're going to keep creating products that at the end of the day are targeting people that already have some sort of access, and those that really require the support are unable to get it. So YEB's goal is to reach gender parity by year 5, and this is embedded in our investment structure in the sense that every year we intend to increase our 30% gender targets by 4%, and then that allows us to reach gender parity by year 5. Our entire board and IC is all gender balanced, and the way that deals are originated is in such a way that a lot of female-led businesses are given priority. The digital capabilities, like digital public infrastructure, is not just left to the public sector. The private sector has a huge role to play. And so by being able to support the ecosystem at the rural level, what we're doing is really enabling the private sector to participate in the creation of a sustainable DPR ecosystem. And I'm really excited about what that could do for young people and women. There's also what we call the family and friends round. So a lot of young people and women in the countries that we're currently living in do not have access to family and friends funding to even allow them to put the base infrastructure for their businesses. Now, the YEB Ecosystem Development Fund provides reimbursable grants between 500 to 10,000 USD, and this allows businesses, especially businesses in those demographics, to be able to put some of this basic infrastructure in place, which then allows them to grow and scale, secure more funding, and at the end of the day, be able to utilize tools like AI in their operations. And of course, I think I've spoken a little bit about capacity building and building AI literacy through local institutions like ESOs and business development entities. I'll stop here. I think I'm just a minute away from my 12 minutes, Shay. And I'm looking forward to getting your questions. And yeah, thank you.
Thank you very much, Surayyah. Thank you. That was very, you really managed your time very well. And thank you for the detailed presentation. You are operationalizing YEB, Nigeria's first blended finance vehicle, specially designed to reach youth and women-owned MSMEs at scale. What does building that institution from the inside teach you about the relationship between financial architecture, digital readiness, and women's economic agency? And what must the development finance community do differently right now if it is serious about closing the 42 billion gender financing gap? You have 2 minutes. Thank you.
Okay. So I think we need to be honest about the problem that we're dealing with. And I think the problem that we're dealing with is a massive capacity issue. And the capacity issue does not exist at the urban level. It exists at the rural level. The vast majority of the MSMEs that we're talking about that are informal, that are unstructured, that are unable to access financing, they're the same set of women that do not have access to devices. They're the same set of women that do not have access to the internet. So we cannot start to, address the financial issues without necessarily addressing the core access, digital inclusion, basically. So I think what we need is an integrated approach, especially from development institutions, to say what leads to what, how do we feed into each other? So a YEB is trying to develop the ecosystem, but at the end of the day, a YEB would have selection criteria, you would need to have women that have a level of literacy, digital literacy, a level of digital integration in their businesses. But for those women to get to that level, they need a digital access first. So I think it's really an integrated approach when it comes to developing programs and seeing what feeds into what is the pipeline for what. And then at the end of the day, we get to that access to financial instruments, being able to grow and scale your business. But at the core of it is digital inclusion and capacity building.
Yeah. Thank you very much. I think that generally speaks to what panelists have already said. Digital inclusion is at the center, and there's a need to have an ecosystem approach to these things. Without wasting much time, I think I would like to bring up the next presenter. Her name is Elizabeth Rami. She's the Chief Operations Officer at Co-Develop. Ms. Rami will close by addressing the questions that underlie everything we hear today. What institutional and governance machinery must exist behind any credible commitment to inclusive DPI? So she'll be shedding light on these things. Thank you. Ms. Rami, you have the floor.
Thank you so much. We've covered quite a lot already, so I will try to move quickly through this, as I think many of these points have already been covered. But just quickly to introduce Co-Develop for those who may not be familiar with us, we are a catalytic fund that exists to accelerate the adoption of digital public infrastructure, particularly safe and inclusive digital public infrastructure globally. I won't spend too much time on the definition of DPI. I think this has been implicit in many of the presentations so far, but the key point that I want to make here is that a DPI approach involves reusable technological building blocks, not siloed solutions. So it's about building that digital plumbing that integrates across many different use cases. Again, many of our panelists so far have talked about the challenges that women-owned businesses do face. As Oluseye mentioned in her introduction, women-owned businesses are more likely to operate in the informal economy and can therefore be harder to reach with traditional financial institutions and services. So just quickly, some of the ways in which different forms of DPI can benefit women-owned businesses. Digital payments is where we see the most research. There's the most evidence around this. There's reduced time to access financial services, so opening a bank account, applying for credit. It can improve physical security because women do not need to carry cash. It can allow women to reach a wider customer base. And as others have spoken about, it can reduce gender-based discrimination in financial services if you can get that algorithm right by automating some of those decisions about creditworthiness, by allowing financial service providers to better understand the cash flow of a business and business operations over time, which can lead to lower interest rates. With digital ID, it can increase access to social and financial services, particularly when paired with data exchange systems. And one point that I think is quite interesting, our colleagues at Dial had done some research with women business owners in Ghana, and they talked about how having that ID card also increases that sense of belonging. So there was a quote from one business owner who mentioned that it makes you believe that and know that you're from Ghana. So I think there's also that intangible confidence building and connection that's an important piece of this as well. And then finally, with data exchange, I think data exchange is like the sleeper hit of DPI. It can really decrease the time for enrollment in different services. So women statistically are more time constrained than men. I suspect many of the women in this session can verify that in their own lives. And so I think data exchange really has a lot of potential around supporting women in general and women business owners in particular, by saving them time to access services like business registration, financial services, credit. And it can also improve the targeting of social welfare programs and provide that data where you can actually analyze the unique vulnerabilities that women face and design interventions that specifically address those needs. So what is gender-inclusive DPI? Again, this has been implicit in many of the discussions we've had so far. But I think the three key points are, one, being designed and implemented through multi-stakeholder arrangements that are centered on community engagement. So in this context of the conversation today, I think that includes women's business associations, women business owners being actually a part of that process. Again, it should address the key challenges that women and girls face in accessing and using services. And as, again, has already been mentioned, the importance of gender disaggregated data so that you can actually measure differential impacts and address exclusion as it arises. Why do we need to design for women from the outset? Consider the case of crash test dummies. So cars have existed for well over 100 years now, and women are more likely to be seriously injured or killed in car accidents, particularly front-facing accidents. And that's because women are considered out-of-position drivers simply by existing. So because women tend to sit further forward in the car, and they also tend to sit higher up to see over the dashboard, we are by default out-of-position drivers, and the car is not designed to protect us in the same way. It's only in 2000 that they started using quote-unquote female crash dummies. They just took a male crash dummy and they scaled it down, and they considered that sufficient. But women are anatomically different than men. Our pelvises are in different positions, and so this leads to us having much greater vulnerability when driving a vehicle. It is actually only in the last few years that a Swedish designer developed an anatomically accurate female crash test dummy that is now starting to be rolled out in certain markets. But now we also need the regulation that actually requires their use in testing and actually mandates a collection of that data and then the design of the car around that. So the reason I bring up this example is I think, one, it shows the importance of including women in the design from the start, and also the importance of having that regulatory environment that actually mandates women's inclusion as we're thinking about safety and design. So quickly wanted to introduce, for those who may not be aware, the Universal DPI Safeguards Framework that our colleagues at the UN Office of Digital and Emerging Technologies and UNDP have led and facilitated this process. The key excerpts, you can Google it and find lots more information online about the whole framework, but in particular, one of the operating principles is about responding to gender, ability, and age. I think at the core, it's about do no harm, not exacerbating existing challenges or creating new ones that can impact women's access. There are many assessment indicators that you can, again, find them all online. But just to give some illustrative examples here, you see that it's both about the design of the DPI system, but also about the processes surrounding using it. So, for example, having ID centers with female staff members. I think we heard this echoed in the SANEF presentation about the importance of women actually being a part of the process, women having more trust when they see other women involved in that process. Likewise, having redress mechanisms for gender-related harms, but then making sure that women are aware of those mechanisms. You can have a great mechanism, but if no one knows how to file a complaint or to seek redress, you haven't really solved the problem. We've already talked through many, many examples, so I won't spend a ton of time on this, but just highlighting a few others that exist of DPI systems that are really supporting women-owned businesses in Africa. COMESA has a digital payment platform that is designed to be low cost and accessible for micro and small and medium enterprises, and a particular focus on women and youth. So that's already live in the Zambia-Malawi corridor, and there's more expansion coming just in the next few months. SADC is also working on eKYC that enables migrants and small businesses to use digital IDs to open formal accounts. Again, that is active in Southern Africa. And then Rwanda credit scoring project that is still in development is going to target women farmers by leveraging alternative data to expand access to credit. But one thing I would say on this slide is that it's actually a bit hard to find some examples around DPI that's designed for women because it's not often explicitly been included in the design, and there's not always gender disaggregated data to show that differential impact. And so it really leads into the final recommendations that we'll make. So these recommendations come from a publication that we just produced with UN Women called Making DPI Work for Women and Girls. You can Google it to find it, or I'm happy to give you the link afterwards. We had these 3 key recommendations, and then I've sort of targeted them specifically for today's audience. So one, investing at scale in gender-inclusive DPI. Specifically adopting the Universal DPI Safeguards Framework as a minimum standard for all DPI investments. Secondly, designing and building DPI with and by women and girls from the start. A very important piece of this, especially for our colleagues here who are funders and multilateral banks, funding civil society organizations to participate as genuine partners and co-designers throughout the DPI lifecycle. And then finally, this is probably the 5th time I've said it, I'll say it again, gender disaggregated data. If we don't have the data, we don't know who's being excluded and why, and we can't address targeted interventions to include them further. So just having that data collection is really, really critical, and then analyzing it, following up with it, tracking it over time is really what's going to enable us to actually know that we're making progress and demonstrate that over time. So with that, I am finished. Thanks.
Thank you very much. Thank you very much, Elizabeth. Okay. Thank you very much, Elizabeth. It's very interesting to, thank you for the very detailed presentation. And honestly, I think I agree with you that designing DPI, identity, payments, and data exchange with women in mind would go a long way in solving a lot of our problems. Without wasting much time, I think our time is fast spent. We have just 7 minutes left. I would like to, and we're moving into the Q&A session, and participants can ask their questions, but please note that, for you to be heard on the live stream, you have to go to the mic at the back to ask your questions. And because of the little time we have, it would be nice that you have the panelists that you want to answer the question in mind so that you can just direct your question to the person. Thank you. And maybe Ami and Lee can take over questions since I'm not there physically, so because you can see and coordinate better. Thank you.
Thank you, everyone. If you have a question, please line up at the microphone right at the back and pose your question there.
Hi, thank you very much for your presentations. My name is Julie Wieland, and I'm with the Health Strategy and Delivery Foundation based in Abuja, Nigeria. And we had worked on a project with private sector associations, and just hearing about this design of needing women in the informal market. This is one of the aspects that we worked on. So just wondering, I know particularly for Nigeria, there's AMWITA, which is the Association of Women Merchants. And then there's also the Federation of Muslim Women as Marketers. So I'm wondering if in all of this design process, are we actually going to the people that have these associations and have these already kind of built cooperatives of women who already include the informal market in the design process? And then secondly, just talking about monitoring and evaluation, which is beautiful to hear. Is there a way that you can extrapolate potentially the data when you're looking at domains of which this applies to? So what domains are we really looking at as use cases? Is it in agriculture or is it in textiles or things like this, where we can know and kind of have poll estimates out of the population of women that are involved in that? So just curious if any of those processes.
Perhaps we'll take three and then we can have the panel answer the question. Yeah, please go ahead. But I don't think we can take more than who's lined up right now, unfortunately, due to the time constraint. Yeah, go ahead, please.
Hi, thank you so much for your wonderful presentations. My name is Avishta. I'm from African Languages Conference, a nonprofit based out here in the US focused on language and digital justice. So my question, I've heard a couple of you talk about language as part of this process, but it seems kind of an add-on and not really a focus. And I truly believe that digital inclusion can be achieved when language inclusion is thought as part of the design process. So with with almost 3,000 languages that are spoken across Africa, and only a small number are digitally represented, how can we talk about inclusive DPI or AI unless multilingualism is designed into the system from the start, as opposed to thinking of it as an afterthought? Thank you.
Yes, please go ahead.
Thank you, dear panelists, for your very brilliant presentation. So my name is Yvonne Penkwan. I am a Humphrey Fellow and currently affiliated with the World Bank Group Legal Vice Presidency, and also a court administrator from Cameroon. My question goes to Rita. So in addition to the pathways you mentioned about making access to digital infrastructure inclusive for women, so do you think that meaningful digital access should now be framed as fundamental rights and made enforceable? I mean, given the example that you gave and concerning Benin, that has adopted a very unique digital gender policy in bridging the gap in the digital divide. Thank you.
Good morning, everyone. My name. Sorry?
You can keep going.
Okay, good morning, everyone. Good morning, panelists. My name is Kasum Koulibaly. I'm an international gender equality and women empowerment expert, and I am an economist. I want to have 2 or 3 points about this conversation. The first point is about coordination. I wanted to see here in that room the African Union Commission or all over institution working in that area of space, so that we can have a very, very important conversation with this topic, because talking only between civil society and the World Bank is not sometimes sufficient to go deeper and to address the key challenges we are facing now. And the second point is about the capability, digital literacy, and training about what we are talking about. First thing, I think that before going to the digital space, we need to think about girls at school first. Because the issue is not only the digital issue, it's a traditional education system we have in our countries in Africa. How have we been able to support the education system so that we can maintain girls at school before going to the digital level? This is my point, as that what strategy, what solution do you think we can bring on board to let African girls to be access to this education system? And I have a good news about that. My school, the Thunderbird School of Global Management, we are now trying to launch a program called 100 Million Learners Initiative. Is to bring a digital platform where we can train all over the world, women, but especially in Africa, to have digital literacy, to have access to entrepreneurship, and all kind of support we can bring together. And I think that this is very important in our process. The third point is about which kind of economy are we talking about. In my research, in my experience in Africa, I think that solidarity economy is the most what fit in Africa. But when we talk many of the time about women as individual, it's something we need to see exactly how we can bring also men on board to support women in that process, especially when we are in a space of rural and agricultural development sector. Because access to land, access to finance is very, very challenging for women when men are not involved in the process. What's your thinking about that? I want to hear about.
Thank you very much. We are a little bit tight on time. Actually, the session should be ending right now, but we'll give 5 minutes for the panelists to respond. Hopefully, I know that might not satisfy everybody, but a good thing is we have the space outside where you can continue the conversation, and you can also connect with the panelists virtually if you'd like. So over to the panelists and also the ones online to respond to the questions that were posed.
Rita, I don't know if you can take the questions that were directed at you. There's a particular question for you, and then there's another particular question around digital capabilities. So if we could take those, then Surayyah can take the Nigeria context question, and then Lily can address the building DP around language questions. Thank you.
Okay, amazing. So I will go with that. Thank you for the questions. Maybe starting with the first one that was directly addressed to me. So whether digital access can be considered as a fundamental right, if I understood your question correctly. So thank you for that. This is very important. In today's world, we can see how much a person can be constrained when they don't have digital access. I mean, all of us here in the room, when you go somewhere, some of the time, the first thing we're looking for is like, the Wi-Fi code, or make sure that you have, access to internet in, any ways possible. So I really wish that the thinking goes this way, but at the same time, I'm also conscious that there are also, if I can say, quote unquote, in the real world, a lot of constraints still. When we talk about the women inclusion, for example, recently I learned that in Egypt, for example, very recently, women couldn't work at night. But they lifted that, that restriction. That's important. And even some sectors were restricted to women because they were deemed too dangerous, So it's really moving, ensuring some kind of fundamental right in terms of access to labor, ensuring some kind of fundamental right in terms of, access to identity, to, over very basic things, I don't know, energy or whatever. And then bringing that digital, fundamental right is also important. So I think that's where civil society organizations have a big role to play, to really push that, advocacy, to really push that discussion. And in terms of, development partners, we also have to do a lot of research to show the evidence, so that this is like a very evidence-based, decision. But I think I would say in my humble opinion, maybe in the short term, no, but I think more and more it's really a topic that we should think about, and I'm happy to continue the discussion about that. Thank you. Yeah, and just quickly on the capabilities, question. I mean, I will be brief because I know we're running out of time, but I think it is essential because building digital infrastructure without ensuring capability is like a waste of time and investment. So it's really important. It's essential, and of course it can come in different forms depending on the context, but really at the heart of everything we should do about DPI inclusion and adoption. Yeah, so I will stop here and happy to continue the conversation after the session.
Thank you very much, Rita. Liz, if you could just use the remaining 1 minute to just address the building DPI around languages and all that, considering that, African countries have a lot of languages and ethnic groups and all that. Please, if you could take that in 1 minute so that we can wrap up by
Sure, I think this is a great question, and I think it's a really good example of where DPI and AI can be very reinforcing. They provide different layers within these technologies. And so I know India has been a leader in this area. Obviously, they have a number of different local languages spoken in that country, and they're developing a model where you can actually build a local language model that's sector specific in as short as like a week. Where you're generating the vocabulary that's for local language around maybe agriculture, for example, and able to sort of add that AI language model on top of the DPI-based system that's providing support for farmers. And so the farmer can actually interact with the DPI system in their local language. That gets translated into the language that the DPI information maybe is stored in, and then that gets translated back into their local language. And all of that can also be done to be auditory as well. So literacy is not necessarily a barrier as well. So just in brief would say that this is where, again, AI and DPI can really be mutually reinforcing. And there's a lot of really good work out there being done for that. So thank you.
Thank you, everyone. I think we're just 1 minute past our time. If you've asked a question and you've not been answered, you can walk up to the panelists who are physically present to further discuss with them. Thank you, everyone. Over to you, Ami and Lee. Thank you.
Thank you, everyone. We have another session here at 1, and we're happy to see you here again at 1. We also have a session across in the room across. Thank you.